One of the biggest forces reshaping Canadian housing markets right now is something most people don't fully understand, and that's a dramatic pullback in immigration. Canada's federal government has been aggressively reducing non-permanent residents since late 2024. Permanent resident admissions dropped from 464,000 in 24 to 380,000 this year. And the federal government projects the Canadian population will decline by 0.2% again this year. The first time in Canada has ever experienced an annual population decline, which was last year, and we're going to see it again this year. For housing markets, this matters enormously. When population stops growing, demand for housing stops growing. That's exactly what we're seeing in Vancouver and Toronto. Vacancy rates are climbing, rental prices are softening, condo markets are flooded with supply that nobody is absorbing because the tenant and buyer pool shrank. In the purpose-built rental market specifically, TD Economics found that drastically slower immigration inflows underpin a rent growth forecast of just 3 to 3.5% this year, roughly half of 2024's growth rate. Now, here's the Alberta story, and it's genuinely different right now. Some 19,344 people moved to Alberta from other provinces in the first quarter of this year. And while that's down over 8% from a year earlier, Alberta has maintained the top interprovincial migration destination ranking for 14 consecutive quarters. The people coming to Alberta aren't international students or temporary foreign workers. They're Canadians from Ontario and BC who are permanently relocating because they can't afford to stay where they are. That's durable demand, the kind that holds a housing market stable even when the national population is starting to shrink. Now, Alberta released its own population projections this past month in July, and they identify that interprovincial migration remains highly sensitive to economic conditions and is expected to remain supported by Alberta's strong labor market, housing affordability, and lower tax burden. What this means for Cochrane and Calgary markets is that the foundation of demand is structurally different here than it is in Toronto and Vancouver. We're not dependent on the immigration pipelines as much that the federal government can turn on and off when they want. We are the destination that Canadians choose when they do the math and decide they want a real shot at home ownership, and that isn't going away.